Hi, this is Mijun from Mijuron University. October 10th, let's start today's big main referee segment. Welcome once again to Mijun, where we continue to uphold the fundamentals of investing in United States stocks. Another joyful Friday has arrived. But even though Friday has come, it seems like there are some people who aren't feeling so great. Let me talk to you first. This post was made 14 hours ago by user identification HeQ. Not long ago, you said that AMD's stock performance wasn't good, so you might reduce your holdings. But now that it has surged like this, I'm confused from my perspective. And also, there's someone using the identification Surirang below that. I also heard what you said and sold all my AMD shares, he lamented. First of all, there's one thing we need to make clear. AMD's stock price jumped 25% in a single day. The reason was that Open Artificial Intelligence announced an incredible partnership where they could take as much as a 10% stake in AMD, but no one in the world could have imagined that Open Artificial Intelligence would be able to secure as much as a 10% stake in AMD. As I've mentioned many times before, momentum can change when a catalyst is announced. I've told you this before. So this is AMD stock price chart right now. If you look here, when I talk negatively about AMD stock price chart on the broadcast, the 20-day moving average and the 60-day moving average crossed like this, and a death cross occurred. And the very important support level of $161 was completely broken. Therefore, considering various circumstances, the trend was not good, so the momentum weakened. Therefore, as someone who sticks to momentum investing, I have said before that it would be right to reduce the proportion of AMD now, and I actually reduced my AMD holdings. Those of you who are looking at the Mijuan portfolio will remember this. Recently, I significantly reduced my investment in AMD. Even so, I still felt good when AMD's stock price soared. Out of all the stocks in the world, I'm only investing in 19 right now, and one of them is AMD. So, of course, I can't feel bad when AMD's stock price soars. So I felt really good about it. Of course, I was a bit disappointed that I recently reduced my position, but still, the fact that my top pick, Mijuan, soared by 25% thanks to some really good news was great news for me personally and also as someone running the Mijuan channel. Nevertheless, for those who think it's unfortunate that the stock price soared after they reduced their shares, I personally find that a bit concerning. And one more thing, it wasn't just AMD stock that soared over the past week. The performance of the other Mijuan top picks was also very good. Coinbase jumped over 11%, B2 rose 9.68%, the Ethereum Exchange Traded Fund gained 7.40%, and Taiwan Semiconductor Manufacturing Company climbed over 5%. And most of the Mijuan top picks recorded gains, so if you've been investing with Mijuan over the past week, it's only natural that you're feeling good. So, for those of you who feel bad when a stock you don't own skyrockets, or even if you do own it but feel upset just because you don't have a large position in it, I think you need to change your perspective on stock investing. Stock investing is about looking toward the future, and there is no way to predict the future with complete accuracy. That's why we look at various fundamental indicators and momentum indices when making investment decisions. So if my predictions are correct more than 50% of the time, I can generate good wealth. So if I have to hold every stock that's going up and increase my allocation to every stock that's rising, I personally think that's unhealthy and the probability of it happening is close to zero. I hope that those of you watching this broadcast can let go of a bit of greed and invest with a healthy and somewhat happy mindset, continuing to invest steadily and for the long term. Let's get started with today's big doozy news for October 10th. Here's a brief summary of yesterday's United States stock market. First, if you look at the S&P 500 map, you'll see that yesterday red clearly dominated over green. Therefore, Among the 500 leading companies representing the United States, there were far more stocks that fell than those that rose. Well, the fortunate part is that NVIDIA's stock price went up by 1.8%, which is a relatively big increase. So for those who have a high proportion of NVIDIA in their portfolio, like myself for example, that was good news. From the perspective of investors like this, the returns weren't bad. If you examine the movements of different indices throughout yesterday, while all the other indices closed in the red, only the microcap stocks ended up with a plus 0.09% gain. Looking at the performance of the 11 S&P 500 sectors. Yesterday, only consumer staples gained, up 0.32%. All the other sectors showed negative returns, so since there were more stocks that fell, the market breadth must have narrowed. As you can see, it dropped below 50. Therefore, among the 500 companies that make up the S&P 500, only 49.3% currently have a good short-term trend. The good news is that more than 61% of the stocks still have a good long-term trend. However, if this trend continues to weaken, this can be seen as a warning sign. Now, if you look here, there have been several times in the past when this green line dropped below 50, but then it bounces back right away. If market breadth fails to rebound and instead falls below 50, then 40 and even 30, this trend will be evident. In the end, you can see that this would create a situation where the market index, the S&P 500, would inevitably fall as well. Now next is the volatility index, VIX. It's VIX, that's right. It's similar to yesterday. At 16.43, it still shows a calm market. The fear and greed index has dropped a little. Yesterday it was 53, but it dropped sharply to 49, falling below 50. As I've explained several times, it's not good if it breaks out of the box range. Now we've reached the bottom of the box range. So if the stock price keeps falling and the trend worsens over the next few days, this situation could drag on for a while. Therefore, I personally think it's very important for it to rebound near 50 again. Market score remains unchanged. Since it's still at 64, it can be interpreted that the number of stocks in an upward trend far exceeds the number of stocks in a downward trend. Today is Friday. What does that mean? We can check the results of the American Association of Individual Investors survey. Personally, I place a lot of importance on this survey result and reflect it heavily in my investment strategy. According to what was announced yesterday, 45.9% of investors now have a positive outlook. It has gone up a lot. Just a few weeks ago, it was below 40. And if you look at the historical average, it's 37.5%. So, the percentage of people who have a positive outlook right now is much higher than the historical average, and that's a negative sign. The share of investors with a negative outlook has dropped significantly. Last week it was 39.2%, but this week it dropped to 35.6%. As I keep saying, the 45.9% shown here means they are currently invested in stocks, while the 35.6% means they've sold all their stocks and are holding cash. If you understand it this way, we can easily grasp the situation. However, the 35.6% is still higher than the past average of 31%. Therefore, it's a bit concerning that the number of people with a positive mindset is excessively high. Notably, 35.6% of people are still betting on a decline above the historical average. It can be interpreted positively, suggesting that the United States stock market still has some room to run. Next is the performance of Media1's top picks. Yesterday, 7 stocks ended higher. Meta rose 2.78%, showing a positive trend for the first time in a while. Second, Celestica rose 1.92%, Nvidia 1.83%, Distra 1.67%, Credo 1.53%, First Solar 1.27%, and Palantir 1.04%. Now the rest fell. Coinbase fell 0.07% and Bitcoin dropped to 121,660. Broadcom fell 0.14%, Talem Energy 0.30%, Tesla 0.72%, AMD 1.13%, Alphabet 1.2, 6%, Taiwan Semiconductor 1.52%, Strategy 3.18%, and Bit 3.87%. And after the Ethereum Exchange Traded Fund recently surged sharply, it corrected and dropped by 7.97%. Let me say this again, the Ethereum Ultra, the Ether Exchange Traded Fund. It's showing a level of volatility that's hard to handle unless you have nerves of steel. Its volatility is nearly double that of Bitcoin. So, considering your own investment style, I can say that this is a top pick among United States stocks worth investing in. For today's broadcast, I've prepared news related to Nvidia. Yesterday, while most of the stocks in the S&P 500 fell, Nvidia's stock price rose by nearly 2%. That's because there were two pieces of good news. If you look at the first news story's headline, the good news is that the United States government has approved the export of Nvidia artificial intelligence chips to the United Arab Emirates, for the first time. Let's take a look at the key points. The United States government has approved the export of Nvidia artificial intelligence chips worth billions of dollars to the United Arab Emirates in accordance with the bilateral artificial intelligence agreement signed in May. The agreement includes plans to build a 5-gigawatt data center in Abu Dhabi and provide up to 500,000 United States-made artificial intelligence chips annually. Now, let's take a brief look at how much revenue could be generated if about 500,000 units are provided annually. The exact scale of the export license approved this time has not been disclosed. However, according to officials, it is said to be worth several billion dollars. In addition, the United States government mentioned that it could allow the export of up to 500,000 advanced artificial intelligence chips per year. Now, if we do some calculations with this, let's assume that all 500,000 units are sold. And if we look at the price based on Nvidia's H100, it's about $30,000 to $40,000. And if the specs are even better than this, it could go up to $50,000. So, let's set it at $30,000 to $40,000 for now. If 500,000 units are sold at that price, the sales revenue would reach $15 billion to $20 billion. Recently, Nvidia's quarterly sales reached about $30 billion. So that means it's possible to say that this accounts for about 50% to 67% of the sales generated in a single quarter. And one more positive aspect is the geographical diversification of infrastructure demand. Now, what this means is that up until now, we've been overly dependent on demand from the United States. But as relations with China have worsened, sales from China are no longer even included in the guidance. So, having lost China, the fact that we're now generating sales and contributions from the Middle East can be interpreted as a very positive sign. Now let's move on to the second positive factor. This time, it's the target stock price suggested by institutions. Nvidia's stock price is still below $200, but a target price of as much as $300 has appeared. I think it's worth reading to see what basis they have for this. The investment firm Cantor Fitzgerald is mentioned. They have once again selected Nvidia as their top pick, their highest recommended stock. The overweight rating basically means they've given a buy recommendation. They've increased their target price from $240 to $300, making it one of Wall Street's highest. What does that mean? They're saying that even from the current stock price, there's potential for an additional 56% increase. Cantor's new target price is much higher than those from other investment banks. Let's quickly review other institutions' target prices. This week, in the table, Melius Research raised their target price to $275. And Goldman Sachs recently set their target price at $210. Last month, Bank of America raised theirs to $235, and Barclays also adjusted theirs up to $240. Recently, most institutions have raised their target price for Nvidia, but $300 is their first time setting it. In early Thursday trading, Nvidia's stock rose nearly 2%. It hit an all-time high during the session, and over the past 6 months, the stock price has doubled. So Nvidia is the stock that hit bottom in April and has risen tremendously in a short period of time. That's how you can see it. How about the recent price target hike? This came after a year of investor meetings that Cantor's analysts had with Nvidia's top management, including Chief Executive Officer Jensen Huang and Chief Financial Officer Colette Kress. So after meeting directly with Jensen Huang and Colette Kress, as well as the rest of the management, they raised the target price to 300. That's very positive. It is said that the details of a new partnership with OpenAI were also discussed at this meeting. What did Cantor's team led by analyst C.J. Wiz say on Thursday? What is the vision for this partnership? So, OpenAI and Nvidia decided to form a partnership. What this means is that server original design manufacturer refers to manufacturers that make servers, and cloud service provider refers to cloud service providers like Amazon Web Services, Microsoft's Azure, or Google Cloud. Now, these companies must have some margins, right? These kinds of margins, while removing overlaps, NVIDIA, and Application-Specific Integrated Circuit, short for Application-Specific Integrated Circuit. They're explaining that the cost difference between these two averages out to about 15%. Originally, ASICs are much cheaper because they're custom-made to fit only the necessary parts. But this time, by forming this partnership, they've eliminated the margins that server ODMs used to take and also removed the margins that cloud service providers used to get, so the cost difference between the two has been reduced to 15%. Now, they're saying that if you just pay 15% more, you can use the world's best GPU that Nvidia is so proud of. So this kind of partnership is truly a win-win for both Open Artificial Intelligence and Nvidia. It's being analyzed that this could potentially put even greater pressure on the application-specific integrated circuit market. Alright, the company went on to say that Nvidia continues to carry out extreme co-design on an annual basis, enabling optimization of the entire artificial intelligence infrastructure with the help of full-stack solutions, including compute unified device architecture. So, what does this mean? Now, no company just wants to buy chips anymore. Since they want to deploy artificial intelligence on a large scale, they want to buy complete solutions. In that sense, Nvidia has the biggest advantage. Nvidia is the only company that can provide everything at once, central processing unit, GPU, and software, without distinction. So, you can see it as selling the full stack solution shown here. Now, as for Cantor. Now, Nvidia is earnings per share in 2026. They raised their forecast, saying it could reach $8, far surpassing the market consensus of $6.26. For 2027, the consensus is $7.37, but they expect it to reach as high as $11. These kinds of projections are being presented if they can achieve $11 in 2027. Stock price equals earnings times the multiple. Multiplying $11 by about 27.3 gives $300. So, if Nvidia's PER is 27, $300 is achievable. These are the projections being made. Now, analysts are also pointing out that in the past few months, demand for tokens has surged and earnings per token are increasing. When demand overflows, you can set prices high, leading to increased profitability. OpenAI and other platforms are currently generating gross profit margins of about 50% to 70%. They say that all installed GPUs are currently sold out. What this means is that artificial intelligence platforms like Open Artificial Intelligence have become much more profitable now. By pricing high, they've achieved a gross profit margin of 50% to 70%. And right now, all the GPUs that have been installed are sold out, so obviously they'll need more GPUs. Customers are desperately searching for computing resources wherever they can find them. Especially in the last 12 to 16 weeks, we've hit an inflection point as there's been an explosive increase in multimodal inputs with very long context lengths, like recent videos, combined with time-based reasoning. So, in the past 3 to 4 months, the demand for tokens has increased tremendously, which means that the demand for GPUs is also skyrocketing. The reason for that is explained right here. The first reason is multimodal input with long context length, and the second is the explosive increase in time-based reasoning. Now, let me explain this in a bit more detail. So, what is multimodal? It means that artificial intelligence can understand and process various types of data at the same time, like text, images, sound, and video, just like humans do. For example, to understand the entire content of a 1-hour movie and answer questions about it, you need to remember all the visuals, sounds, and dialogues from the beginning to the end of the movie. So this is a typical example of a multimodal input with a very long context length. In the past, well, it's not even that long ago, just a year ago, most AIs could only understand text or recognize images. But now, there are a lot more artificial intelligence models that can understand multiple modalities, answer questions, and even reason like this. And this technology requires an enormous amount of computing power, in other words, GPUs. Now, another thing that was mentioned is time-based reasoning. What this means is the artificial intelligence's ability to understand the order and causal relationships of events that occur over time. For example, when the artificial intelligence sees a scene of a person falling in a video, it recalls water was spilled earlier and understands the person slipped because of it. We call this ability to reason in this way time-based reasoning. Now, the important point here is this. The explosive increase in time-based reasoning is also another reason why the demand for high-performance semiconductors like Nvidia GPUs is skyrocketing. So, if you compare now to a year ago, back then, the demand for reasoning wasn't as high as it is now. Now, not only has the demand for reasoning increased rapidly, but we also perform reasoning using multimodal methods. And since time-based reasoning has also increased a lot, the number of GPUs, in other words, the computing power required, is rising exponentially compared to before. You can understand it this way. Now, because of the rapid and widespread adoption of generative artificial intelligence, Kent is confidently saying that artificial intelligence is not a bubble. Over the past 12 months, recommendation systems have adopted generative artificial intelligence. Search, social media, user-generated content, and ad recommendations. Now everything is moving from traditional machine learning to generative artificial intelligence. So NVIDIA expects that there will be a $2 trillion shift in spending from traditional computing to generative artificial intelligence. What does this mean? Traditional computing refers to central processing unit-based computing. But now, instead of central processing unit-based computing, NVIDIA is saying that just in the process of shifting from traditional computing to GPU-based generative artificial intelligence, there will be $2 trillion in spending. Therefore, we're not simply in a bubble. The market is starting to see how quality artificial intelligence is providing meaningful and positive investment returns. Artificial intelligence platform companies are now generating investment returns, signaling that the artificial intelligence revolution is just beginning, according to current statements. Now, here's an important number. Kenteo concludes that the artificial intelligence infrastructure market will reach a scale of $3 to $4 trillion by 2030. He's presenting this incredible outlook. Now, when we hear 3 trillion or 4 trillion, it's hard for us to really grasp how big that is. Let me break this down and explain it a bit more. What's the projected size of the artificial intelligence infrastructure market in 2025? There are some differences depending on the market research agency. It's estimated at about $88 billion or 121 trillion won. However, we won't use the $88 billion average. For this calculation, we will use the highest estimate. According to a research institute called Market, the size of the infrastructure market in 2025 is estimated to be as high as $182 billion. So they're saying that the artificial intelligence infrastructure market has already grown so much, even if we assume the size of the infrastructure market is $182 billion, as estimated by Market. If we calculate based on the 2030 market size suggested by Cantor Fitzgerald, which is between $3 trillion and $4 trillion, that means we're looking at explosive growth of about 16.5 to 22 times over 5 years from 2025 to 2030. And if we look at this as an average annual growth rate, we can expect growth of about 70% to 90% each year. That's how it can be summarized. Because of this, we investors can say that we should build our portfolios mainly around beneficiary stocks. Of course, this figure represents the size of the market that includes all the hardware and software needed to run and develop artificial intelligence models, such as semiconductors, servers, storage, and networking equipment. And another thing is that there is a very positive outlook that artificial intelligence technology will go beyond its early stages and become a core infrastructure throughout society. If these assumptions are correct, the average annual growth rate will range from 70% to 90%. With this market, we don't need to invest elsewhere. So, I can once again confirm that this is exactly why the majority of the Mijon portfolio still consists of artificial intelligence beneficiary stocks. The last content prepared for today is today's United States stock video. In today's video, Topney appears once again, and Topney is presenting an optimistic outlook, saying that the S&P 500 will reach 7,000 by the end of this year. Now, I think it would be good to hear directly from Topney about the logic behind this. That's it for today's Big Stock News on October 10th. Thanks for staying until the end of today's broadcast. If this broadcast has been even a little helpful for your investment activities, I would really appreciate your valuable likes and comments. Let's stay strong together until we retire from United States stock investing. Have a happy day. Thank you.
Discussing the rally's future trend, as I mentioned Tom Lee's outlook earlier. He's joining us now. Welcome back. It's great to have you.
Nice to see you, Scott.
How are you seeing the market trends today? We've seen a pretty good upward trend recently, but today there's a bit of a correction. It seems like concerns about the strength of the economy, the labor market situation, and a few other factors are being reflected in the market. What do you think?
Well, I think the market is weighing several different factors. Right now, they say we're navigating in somewhat unclear conditions because of the government shutdown. But the real driving force that's strongly leading the stock market and the economy is artificial intelligence. And this artificial intelligence sector is not being affected by the current slowdown. So I think that's why we're seeing a zigzag pattern in the market this week. Seasonally, from October to the end of the year is traditionally a strong period, so I believe the S&P index could go up to at least 7,000. Even this week, buyers step in during corrections. Today may be weak, but tomorrow is the opposite. I think there's a good chance we can handle it. Overall, I'm still maintaining an optimistic outlook until the end of the year.
I think the market is also ignoring some warning signs right now. Due to the government shutdown and uncertain economic indicators, Moody's Analytics reports that 22 states are in or near recession. And a recent Carlyle survey found the labor market weaker than expected. Rising gold prices indicate global investors are lowering their United States risk exposure. There are still concerns about the artificial intelligence bubble, and it's true that the market is responding too complacently to risks. Artificial intelligence and other structural growth drivers remain strong, so the market seems to prioritize them more. In other words, we're in a situation where we're walking a tightrope between short-term signs of economic slowdown and long-term growth momentum.
Well, I think it's true that the market is definitely less skeptical compared to April, August, or September. You can see that just by looking at positioning or artificial intelligence indicators. In other words, you could say that the market has already priced in a lot of the good news. So the signs of economic slowdown and risk factors you just mentioned are definitely points of concern. I want to emphasize that the artificial intelligence story is actually getting stronger. When I meet with companies and investors, they say the return on investment of artificial intelligence related applications and services is improving over last quarter. That's what I'm hearing. These factors are actually driving corporate spending demand. So I think the market is still likely underestimating the profit-generating potential of artificial intelligence, and this story could continue to have significant momentum going forward.
That's right.
The current data is mixed, and without official government statistics, it's hard to get an accurate picture.
Yes, it's true that I still describe this as the most hated rally. Given the current atmosphere, there isn't significant negative sentiment toward the market. I say it that way because despite investors recognizing the bull market, they still struggle to fully trust it. Many investors believe the stock market will keep rising, but also expect a major downturn eventually. In other words, they've jumped into the market, but their defensive attitude remains because they still lack true conviction. In fact, if you look at their positioning, it's quite conservative rather than risk-on. On the surface, optimism is being acted upon. So I think the expression, the most hated rally, is quite fitting.
Exactly. People sometimes give paradoxical compliments. On the surface, they say positive things about the market, but in reality, they have a bearish outlook. For example, statements like, "This reminds me of 1999," or "Artificial intelligence stocks are at their peak," are like that. They acknowledge that this dry market is strong, but at the same time, they're also trying to call the end of the rally. I remember those days well because I worked as an analyst in the 1990s, although many people have forgotten. In September 1998, Cisco's stock was trading at an annual PR of nearly 60 times. And when the Federal Reserve made its first rate cut in 9 months, the PER soared to 200 times. I believe Nvidia today is like Cisco was back then. However, Nvidia's current expected PER is only about 27 times, which is even lower than Walmart or Costco's 35 times. So I think the market is accepting the good news about Nvidia, but its value hasn't been fully reflected in the stock price yet.
Kakao Talk next year. In the music video, in the Sisuka Kimji Hippa see you next time video, see you next time. See you in the next video. In the next video.